The only market which is trading from the Asian pack is the Korean Kospi index. Absolutely flat right now, just around 30 odd points in the green.
The total sales for Maruti were down 9% on a year-on-year basis.
The overall core sector at 5.4% doesn't look very ugly.
2023 I doubt will match the year that we had.
Jefferies has today upgraded both Hindalco and Tata Steel to buy from hold, and they've raised the target price as well.
The Nifty is up 25 points odd.
If the rest of the world does badly, then we will surely outperform.
Trade has reduced, retails have declined, and we have to manage channel stocks.
GST collections are very well held up. That's one data that gives you confidence that things are all right.
Ministry of Corporate Affairs has actually granted permission for the demerger of core and non-core assets for Shipping Corporation of India.
Currently, the benchmark indices are up close to about 0.5%.
The 2016 exercise that we all recognize as the demonetization exercise has been given the thumbs up by the Apex Court.
The government has initiated an anti-dumping investigation with regards to vitamin A palmitate.
Hello and welcome to Closing Bell, the first one of 2023. I am Reema Tendulkar. With me are Nigel D'Souza and Mangala Malu. Good morning, boys. Day one of the new calendar year, quiet and steady, though just in the last 15 minutes, we have seen a bit of a drop. So currently, the Nifty is at that 18,150 mark. The day's high was 18,200 and a little bit of a knock seen in the last 15 minutes or so. We're still holding up quite steady, up close to about 0.25% on the benchmark indices. The midcaps are cruising along. The midcap index is up 0.7%. The advanced decline ratio is at 2 stocks in the green for 1 in the red. All in all, very, very steady. Most of the sectors are trading with a marginal positive bias. The sector which is shining today is the metal index. There is a big upgrade coming in from Jefferies China reopening. The Nifty metal index is a gain of 2.5%. But look at the other indices like auto, IT, banks, real estate. Largely, you've got, across the board gains coming through of about, 0.5% thereabout on the other indices. The big upcoming cues to track the December FOMC minutes and the jobs data out of the United States later this week. In terms of the IT earnings calendar next week, you've got TCS on the 9th, that's Monday, on 12th, Infosys and HCL Tech, and then you've got Wipro on the 13th. Hi.
Well, hi Reema, hi Mangalam. Reema, you're just talking about these big IT names that are going to come out with a set of numbers. I think the street is still a little bit skittish getting into these numbers, fearing a disappointment. Just pull up the IT index. What's taken a bit of a knock in the last few minutes has been some of these IT-related stocks itself. Whether you pull up the intraday chart of TCS, Tech Mahindra, you can get Infosys as well up there in HCL Tech. All of them have seen a bit of a downtake. Just pull up actually the IT index. That's the one that's dragging a little bit in today's session. Remember, volumes are still much below par. So in the next few days, we'll get a better trend in terms of market direction. For the time being, though, we're holding in the green, though we're virtually at the low point of the day. Mangala, what else?
Yes, Nigel, so we did see some retracement come by from the Nifty Bank 20-day moving average, which is at 43,162 odd. So for most part of the day, we were above that, and now we're seeing some supply out there. For the Nifty, of course, on the way up, 18,250 remains a bit of a congestion zone because we do have the 50-day moving average of the Nifty out there. So those are a couple of technical levels I'm watching out for. But importantly, apart from the IT stocks, which have seen a bit of a knock, today's underperformers have been the FMCG pack. And you pull up any of the FMCG stocks, be it HUL, Tata Consumer, Britannia, all of them at the low point of trade currently. And for the broader markets as well, we are seeing, a big cut in a lot of these consumer discretionary names. Case in point, something like Page Industries, which is lower. We've seen, stocks like United Spirits, Jubilant Foodworks, Marico, all of them be at the low point of trade as well. And the fact that oil is at 86 does not help the cause of companies like Asian Paints as well as Pidilite. So that is one bunch that I'm watching out for in this result season as well, primarily because a lot of people say that maybe the festive season wasn't as good as expected and rural will still take some time to get out of the woods.
Okay, all right. Well, let's run our viewers through what we have lined up on the show, and then we'll get cracking to stock selective action. Well, metals, they're in focus and they're gaining ground after producers hike prices and global inventory levels hit a low. Analysts expect metal prices may have bottomed out, driving stocks higher. Key excerpts from our conversations with the management of Godavari Power and Ispat lined up on the show. And MCX, that's the biggest F&O loser as it extends its software services contract with 63 moons for another 6 months, pushing cost-cutting plans as implementation of new platform gets delayed. We'll tell you why the stock is under some pressure. And brokerages reveal their top stock picks for 2023. Complete details lined up on the show. And finally, we'll talk all things market. Saurabh Mukherjee of Marcellus Investment Managers will be joining in.
So how should you position yourself in the last hour of trade? Mitesh Thakkar of earningswave.com joins in now with his closing strategies. Mitesh, afternoon, thoughts on the day so far, what we've seen, the price action, particularly the slip in the last 30 minutes, and the advice that you would give right now.
So good afternoon. I think, the index still is not ready to extend the rally beyond 18,250, 260 zone. I think till that is clear, the medium and the short-term view will be, or the medium and the short-term view will be on the negative side. So I'm waiting for that to happen. But the indicator setup isn't, very convincing either. On the daily and the weekly charts is slightly negative. The intraday charts are still positive. That's why we are not getting declines as well. So I think it is a market which is slightly in that indecisive but yet contracting phase, and therefore I think trading the index may not be very beneficial. Of course, the bank Nifty is a different animal altogether, and the banking stocks are still doing better than the rest of the pack. They are outperforming. So in that sense, maybe banking can be explored and metal stocks can be explored. But that apart, I think we are also looking at some shorting opportunities on stock side. The index wait it out. I think the Nifty, once it gets a directional signal, then we go and take a trade. For the time being, I have a buy on Crompton. It's reversing from oversold levels. Very nice pattern on the intraday chart. So keep a stop below levels of 337.5 here and look for targets of roughly around 360, 365 to begin with. And on the metal names, Hindustan Copper is something which has caught my attention in the last 1.5 hours. It's given a big breakout, massive breakout with volumes. So that's a buy with a stop at about 113 for targets of 124.
Right, Mitesh, thanks a lot for that. So we will keep those stocks on our radar. Just keep an eye out on Nazara Tech. It's been a big mover in just the last 5 minutes or so. In fact, not just 5 minutes, the last 2 minutes or so, we've seen a big move. And the stock, of course, has halved from the top. But currently, we're seeing some bit of an upsurge on that counter, up almost 7-odd%. Human company, we have Atul Auto as well doing well. And from the broader markets, of course, we have SML Isuzu, which is locked in a 20% upper circuit. So good time to get in Siddharth Sedani, who's the Executive Vice President and Head Equity Products and Advisory at Anand Rathi Shares and Stock Brokers. Thanks a lot, Siddharth, for joining in. Wish you a very happy new year. Your thoughts on the auto sales so far and the auto stocks for this year?
Wish everyone, and including you and everyone, Happy New Year. This year will bring a lot of fireworks in the markets on the upside. With that, thanks for having me on the show. Well, talking about auto space again, a big underperformer of last year. We believe now this space may see a strong revival. If I talk about the sales numbers, where we have seen a mixed bag or maybe negative sales numbers in the two-wheeler pack, whereas positive in the passenger vehicle space, especially from the Tata Motors end. On the commercial vehicle, we are very positive. We've seen Eicher Motor jumping with 17%, Ashok Leyland seen a jump of 45%. So in a way, we are positive with commercial vehicle. And with commercial vehicle, we have Ashok Leyland as our top pick. And we believe the kind of volumes will be clocked from here on for next 2 years will be phenomenal for Ashok Leyland. So Ashok Leyland is our top pick. On a two-wheeler space, we are very selective. And in that selective, we are looking at something like TVS Motors with a long-term perspective around 1,300 target. We believe the kind of contribution they've been doing in the EV space, iQube has been really a super hit product for them. So we believe the volumes of iQube, the EV space, will be strong for this year also. So TVS Motors, and with that flip side, we even like something like auto hangs like Gabriel India, or for that matter, NRB bearing in the auto ancillary pack. We believe the auto revival will see a benefit to auto ancillary. So all in all, 2023 seems to be a revival year for auto.
All right, a revival year for auto. Siddharth, just hang in there. You've given us a couple of stock names out there as well. You like Ashok Leyland, you like Tata Motors, you like TVS Motors, Gabriel, as well as NRB bearings. But the stocks of today have been the metals pack. They surge on account of a brokerage upgrade coming in as well. Nimesh, the first upgrade of this year, and it's been on metals.
In fact, it's been a sector of the day today, right, Mangala?
Yeah.
All the stocks are buzzing in trade and on huge volume. So whether it's SAIL, whether it's Tata Steel, Hindalco, Nalco, all are buzzing in trade. So first, technically a first update coming in, so to speak, on the metal names this time from Jefferies. They have been caution on the sector for a year now, and now they've turned positive and they've upgraded both Tata Steel and Hindalco today. So they've upgraded both the stock to buy from hold. And on Tata Steel, they've raised a target price to 150 from 95. And on Hindalco, they've raised a target price to 600 versus 390 earlier. Now, the key reason for the upgrade is, one, they believe that China has started to ease the COVID policy, and they are going to support the ailing property sector, which both argues well for the Indian steel companies. Also, from an earnings point of view, they believe that the worst margin quarter for the Indian steel names, as well as big chunk of earnings cut for Hindalco and Tata Steel, are now behind. So most of the bad news is in the price, and from here only things can improve, and hence they've turned bullish on the metal names. Within the metal stocks, Tata Steel is the preferred bet for them, largely on back of attractive valuations plus improving asset footprint as well as balance sheet. So on back of that, a big upgrade coming in on the metal names, largely on Hindalco and in Tata Steel, and that had a big rub-off on the entire metal sector today.
Okay, all right, Nimesh, thanks a lot for that. Let me build on to that and give you 5 top reasons why metal stocks, or steel stocks in particular, are doing well. One is the Chinese reopening trade. There's optimism out there, and that's why we're seeing both ferrous as well as non-ferrous commodities have seen a good increase in the last 15 to around 30 days odd. Second up, you have global iron ore prices, which is used for steel making. That gives some sort of a base because that's moving up, and global iron ore prices are up by close to around 15%. And earlier today, well, we got news that NMDC has gone ahead and increased prices by around 200 to around 500 rupees per ton. So that's giving you a kind of sense that the raw material cost is moving up automatically. It gives you a bit of a bench and it pushes up the steel prices as well. Pellet prices as well that normally move in tandem, well, that's moved up from around 7,500 rupees to around 9,200 rupees odd. And Chinese export HRC prices, remember that had seen a sharp correction. It corrected from around $850 odd to around $500 per ton. Now, from the recent lows of around $500, it's bounced to around $600 per ton. So that's a solid rebound that we've seen, close to around 18 to around 20% bounce from the recent lows. More importantly, the domestic price, HRC prices, now are at a discount in comparison to imported Chinese steel. So that's good news. That's come down to roughly around 2,000 rupees odd. And finally, normally you look at imports coming in from FTA companies. That's countries. That's namely Japan as well as Korea. And from there, well, the steel that was coming in there were at a sharp discount in comparison to domestic HRC prices. But that's narrowed considerably. And now that gap has been narrowed to around 1,000 rupees per ton. In the month of November, that was at close to around 8,000 to around 9,000 rupees per ton. So the premium that Indian steel prices was trading in comparison to steel that was gotten from the FTA countries, well, that's come down substantially, which is giving you some sort of a base for domestic prices as well. Well, earlier today, we spoke to the management of Godavari Power and Ispat. Let's listen in to what they had to say, particularly on pellet prices, which are used to make steel.
Before going forward, since we usually maintain a order book about 45 days, so the new pricing will start coming into the picture, in next couple of weeks. So Q4, we expect an average of 9,000 plus. But I would say a pellet capacity will double, which is currently at 2.7, will go up to 5.4. So you can assume the revenue from the pellet side will double, of course. We are very confident if the pellet prices sustain at these levels, which is about 9,000, 9,500 rupees, then we don't need to go to banks to borrow any money. We should. So put together total 3,000 crores, we should be self-sufficient to fund the entire from the internal accruals.
Okay, all right. Well, so that's about metal prices and metal stocks as well. So that's Siddharth still with us. Siddharth, what's your view? Sell into this rally, or do you believe this is the real thing? China is going to reopen and these prices after bouncing are going to hold at these levels. What's your take?
Well, Nigel, none of them, because I am neutral to positive on the metals because of, as you say, November 2021. From that month onwards, we've been seeing a rub-off in terms of metal prices, especially HRC prices and steel prices in the markets. And now we see it seems to be arrested. The attributes which you spoke about, amongst that, the most important attributes is raw material prices like iron or pellet prices are going up. And that will bring in little better and strong prices of metals. So I'm neutral to positive on the metals, very selective in metals, although being a commodity, global commodity, one bad news will shake up again the entire sector. So I would like to be very selective, not going broad-based buying in the metal space, only selective, and that too only with Tata Steel. The giant of all steel, deleveraging is strong with them, with that capacity expansion is in front of them, and they have a more stable pricing than any other player in the market today. So Tata Steel with a target of 146 looks the most interesting in the metals. I would not like to maneuver around buying some non-ferrous space, which is sensitive to the global news. So I would like to stick to Tata Steel with a target of 146.
Siddharth, do you look at MCX? The stock has taken a big knock. It's down close to about 6%. We've been talking about MCX since morning, but the company was expected to transition to the TCS software in Q1 of FY23. And it's this transition to TCS software, which once done, would have lowered the cost for MCX, has been persistently getting delayed. Now it's extended by another 6 months. So the street is very jittery about it, and the stock is down close to about 6%. Do you look at MCX and what's happening there?
Well, Rima, we don't cover MCX, neither we have a report on this. But as you said, the delay of implementation of the software, added to that, I would say the volumes which is shrinking, if I talk about the average daily turnover, was down on a month-on-month basis to the tune of 8%. That is also one of the reason and attribute for the stock to fall. For the months, if these kind of volatility will persist, again, the volumes, average volumes will go down. So I believe, and because of that, there are a lot of downgrades in the market. So I believe one should avoid MCX as of now. Let the downside be arrested. Further downside is also possible because the kind of a weak note it is in.
Okay, all right. So that the request you to stay on with us. For the time being, we'll slip into a short break. The markets are stable with a gain of close to around 50 points. We'll talk all things stocks as well as markets. Saurabh Mukherjee of Marcellus Investment Managers will be joining in. We'll also highlight a couple of stocks that are moving around. Well, that intraday dip that you got, so to call it, that's quickly got bought into. Volumes, again, yet to mention that it's not very, very high, but Bajaj Auto has cut its losses. Management sounded a little skittish today. They said that exports are yet to pick up. And from the two-wheeler, industry that's growing in double digits, there is still pain at the bottom of the pyramid, while the upper half is doing rather well. So Bajaj Auto has cut its losses a little bit. IndusInd Bank has pulled back a little bit. And HDFC, I think that's the larger name in there. HDFC is holding steady. SBI Life as well has picked up some pace. Pull up SBI Life, the stock moves higher as we speak. But Siddharth, I'm going to come to you. I wanted to ask you about the pharma space, in particular Piramal Pharma. Remember, the stock listed at close to around 200 rupees, but seen a sharp correction. Today, however, it's seeing a bit of a bounce. Ekta joins us to tell us the reason why. Ekta.
Thanks for that. Well, yes, Piramal Pharma is in focus because the government has initiated an anti-dumping investigation on vitamin A palmitate. So basically, this is an originating in terms of the exports from China, EU, Switzerland. Now, Piramal Pharma stands to benefit because the company is the sole producer of vitamin A in India. We do understand that the company imports the raw vitamin A, processes it, and sells it to food as well as consumer companies in India. Now, what has been taking place is that there has been a dumping of the final product of vitamin A in the country, and that was coming in at cheaper prices. So if in case this investigation is successful in putting any kind of anti-dumping duty, it would be positive for Piramal Pharma.
Okay, all right. Thanks a lot for that, Ekta. Well, Siddharth, what's your take on this one? Piramal Pharma, the stock listed at 190, 200 rupees odd. Valuation-wise, if they can achieve what they are talking about, second half of the year, the EBITDA will improve. In the next few years, they're talking about bigger numbers in terms of EBITDA. It could be 2,000, 2,500 crores odd. What's your sense on the stock or any other pharma stock that you would rather prefer?
Well, Nigel, I would not like to prefer Piramal Pharma because of the biggest reason is the product profile. Vitamin A, although they are a sole producer and benefiting out of the news which Ekta spoke about on the anti-dumping duty. But overall perspective, I think the larger the product pie is better for me. And I am looking for a direct API manufacturer, which I am very positive on. I am not going into formulations or CRAMS business as of now. I'm directly going to the APIs, and that is Divis Lab. Divis Lab is one play which I am very positive on, although unfortunately the last quarter was a miss in terms of expectations are concerned, but I think I'm very hopeful for this quarter, and Divis Lab seems to be interesting from here on. Added to that and followed by Granules India. I think Granules is also one play on the paracetamol space API slash. I think they will also get strong volumes in the times to come. So API is the main focus for me in the pharma. Divis Lab followed by Granules.
All right, Divis and Granules. Divis, of course, was one of the big underperformers of 2022. Let's see how 2023 pans out for them. Siddhartha, we have the result season dawning upon us, but before the result season, we have the pre-results updates coming in. And in that, some of the notable names, we have the Bajaj twins, HDFC twins. They report their pre-quarter updates. We have Titan, which reports their numbers. We have Kalyan Jewelers, all of them likely to put out their numbers in the next 7 to 10 days. Your thoughts, which one would you play for in this, and which one do you think stands to benefit the most in the third quarter?
Well, I believe Bajaj Twins can give a better than expected numbers. We've seen festive season came up, and this will bring in volumes for them. Added to that, in the NBFC space, we are very positive on the platform-based business like Chola Finance, where 20% of the business is coming from the platform business. And the kind of disbursements and volumes, the percentage disbursements we've been seeing, it's phenomenal. So platform business in the NBFC space, likes of Chola Finance, mainstream banks like ICICI Bank, which we are very positive on the BFSI space, because it's an obvious reason the kind of performance we've been seeing since last 8 to 10 quarters is phenomenal. The kind of advances they're talking about from here on around 20 to 23% is something which is achievable. Slippages are under control. So from this entire scheme of things, Bajaj Twins is positive and promising. Added to that, Chola Finance, followed by ICICI Bank.
RBI releases the fortnightly update on the lending, the credit, as well as the deposit numbers. And the latest numbers which came over the weekend were for the fortnight ending 16th of December. And the numbers are very strong. The credit growth for the banking industry was 17.4% up, while the deposit growth was just up 9.4%, which basically means at least for that fortnight, the net interest margins are going to remain intact, very strong, and the credit growth continues to be very strong. 17.4% was the credit growth for the fortnight ending 16th of December. Siddharth, thank you very much for joining in and sharing your views. Let's get and talk about some more stocks. It is the first trading day of 2023, and brokerages have revealed their top stock picks for the new year. Vivek is standing by. He's at the big wall, and he's going to tell us some more. Vivek?
Thank you so much. So, brokerages, their top picks, their model portfolios, their changes as well as weight increases and decreases. We'll analyze all that, as we step into the fresh year. Now, first up, Jefferies, the main theme for 2023, according to them, is the revival of the domestic economy as well as private capex coming back. The top picks, especially when you're talking about the entire space, is the fact that within the financials, within the banking pack, they like ICICI Bank as well as SBI. Moving on, they actually continue to like, in the property market, they like Godavari Properties as well as DLF. When you're moving on to the auto pack, they like Maruti, they like Tata Motors as well as TVS Motors. Within the space, the FMCG space, they like HUL, GCPL as well as Britannia. And when you're talking about the industrial space, the names that they like are Tata Steel, L&T as well as Container Corporation. On the other hand, some of the sectors that at this point of time they are a little underweight on is IT services, telecom as well as healthcare. Moving on to the mid-cap space, the top picks for Jefferies in the mid-cap space is Thermax, CEMS Info, Prestige Estates, Avasfin, as well as Supreme Petro. And when you're talking about some of the other picks that they like, Embassy, Kajaria, Indian Hotels, Dalmia Bharat, as well as Syngene are some of the other top picks in the mid-cap space. Moving on to the brokerage or IIFL, the large-cap picks that they have, Bharti Airtel, interesting name, SBI Life, NTPC, Bank of Baroda, Interglobe are their top picks. Within the mid-cap space, they like APL Apollo Tubes, Cummins, Apollo Tyres, as well as JB Chemicals. On the other hand, when you're moving on to the small cap space, they like ICRA, they like KIMS, Deepak Fertilizers, Pharma, as well as Equitas SFB. that has seen a bit of a re-rating in recent times. Their top sells, however, are Shree Cement, IRCTC, Aarti Industries, Divis Labs, as well as Wipro. Now, moving on to what Macquarie likes for 2023, it's the top names that they like, with an interesting name, Gale, that they have, as well as TVS Motors. On the other hand, some of the underperform ideas that Macquarie has include names like Bajaj Finance, Jubilant Food Container Corporation, Reliance, as well as Industries. Lastly, we are seeing what Kotak has to say. Kotak, in fact, adds SRF to their model portfolio with a weightage of almost 150 basis points. And these are the stocks where they're trimming a little bit of stake to give that weightage to SRF.
Okay, all right. Thanks a lot for that, Vivek, for joining and giving us all those details. By the way, keep an eye out on HCC. There's a rating upgrade, I think, that had just come up. That was flashing for you on the bottom of your screen. So let's get that stock up. I think it's up close to around 5%. Now moved to around 21, 22 rupees odd. So keep an eye out on that. By the way, PFC, that one's dancing away. It's moved to around 150 rupees odd. Remember, when the market's corrected, that as well did see a bit of a correction. It still trades at around half times price to book. And as we speak, that's moved to the high point of the day. It's moving with very, very good momentum. Let's see whether or not that power reforms that have been taking place, that can continue. If that's the case, then maybe recoveries will be good. Offtake will be better as well. And we'll see some bit of growth out there. The reason we're talking about the stock is even after the big rally that we've seen, it still trades at around 0.5 price to book. But how do you approach the markets in 2023? What should the allocation be like? Saurav Mukherjee, founder of Marcellus Investment Managers, joins us on the show. Hi, Saurav. First of all, Happy New Year to you, your family, as well as everyone at Marcellus. Wishing you all a cracking 2023, which could be a bit of a rocky year. Saurav, what's your advice? I mean, how are you all approaching markets in 2023? We did fairly well, resilient. The domestic funds did see, our markets support our markets as the FIs did pull out. But your sense about how 2023 is likely to shape up?
Look, I think, honestly, we're doing the same thing that we have done for the last 20 years, which is realize that beyond high-quality stocks, there really are no other asset classes that will create wealth for my family, my friends, myself. And therefore, my money, my parents' money, Marcellus' 10,000 clients' money, 10,000 clients' corpus remains invested in high-quality Indian stocks. And we really don't lose too much sleep about, what will be GDP growth, where will the Sensex end up at the year end. I think that sort of stuff, that sort of forecasting, crystal ball gazing actually has very little role to play in serious investing.
Saurabh, take your point. And on that itself, I mean, you speak about a few high quality names, etc. Just wanted your thoughts on a couple of things. One, we recently had a conversation with regards to, storification or the biases that one may have while investing. Wanted your thoughts on that one. And secondly, on GMM Pfaudler itself, the promoters have sold about 17.3% stake with a remainder 13-14% still to be sold. And, if the previous trade is something to go by, it was at a steep discount to its current price already. Your thoughts on how one, perceives event risks? So, for GMM Pfaudler, event risk, and generally across the board, storification or behavioral biases?
I think storification is a fact of life, right? We live our life in stories. We see whether it's our personal life or our professional life. The way we understand the world is through a narrative. So those who are watching your channel, their understanding of investing in Indian equities, the understanding of their job is a micro story, a chota sa story they tell themselves, and investing is no different, right? We call it an investment hypothesis as the sort of technical name for it, but effectively, investment hypothesis is, in inverted commas, the story around the stock. And that's how investing has been done since the beginning of time. Anybody who believes investing is done by looking at PE multiples or PB multiples, I think needs to go and drink a hot cup of coffee, like the cup of coffee I was sipping a minute back. So I've never quite understood what the issue around storification has been. I think that's the way human beings naturally understand the world, rather than saying that I will invest in stocks with P multiple below 20 or 25, or those sorts of thumb rules which don't get you very far in either in investing or in any other facet of life. Vis-a-vis GMM Pfaudler, I didn't quite see what the issue was. The German private equity fund, which has owned this company, used to be the majority owners till 2.5 years ago. The German private equity fund is nearing the end of its life. And naturally, the German private equity fund, as they said as they said 2.5 years ago, is gradually exiting the company. Having been a broker myself for a big part of my life, when you sell 17-18% of the company, as you rightly said, a company with a market cap of $1 billion, you're selling 17-18%, you're placing $180 million, naturally you have to give a discount. And the day they gave the discount, we happily bought in the market. And we've owned it for 3.5 years. We've seen this company's profits grow sixfold, I think, in those more than sixfold, actually, those 3.5 years. And we've seen the company go from being a market cap of $200 million to be $1 billion market cap company. Profits are growing at 50% in the current fiscal. Business is in good shape, and we continue looking for more opportunities to buy more of the company. Hopefully, there's still a bit of a stake that the German PE firm has. Hopefully, when they offload that, there'll be another opportunity for us to buy some more.
Saurabh, afternoon. That's been your strategy, right? Double down on the stocks that you hold whenever the opportunity arises, when there is a steep decline in prices. In the last 2 months, can you tell us where is it that you've increased your weightage, and vice versa? Where is it that you've looked to bring down your weightage because the weightage of that stock in your portfolio became too high for your comfort level? And any churn that we've seen, any stocks in, any stocks out in the last 2 months? Except GMM Pfaudler, which you spoke about.
So just to clarify, right, what we look for is if the business is doing really well, but the stock price has come off, then obviously it's time to ramp more. There's a certain quantitative structure that we have, which we use it to guide our traders on where to ramp up and where to ramp down. But just to take a case in point, Divis Labs, we think the franchise continues to be the best API franchise in the country by some distance. I think there's clear daylight between Divis and any other API maker, but a lot of people got very excited when molnupiravir demand for molnupiravir fell as COVID rolled off, and therefore the stock is down 35% I think in the last 12 months. So we think the shares are trading at a 50% discount to fair value, and basis that the last 3-4 months have steadily ramped up the position in Divis Lab. Similarly, Dr. Lal Path Labs in the first 6 months of 2022, I think the stock was off 50%. And again, we could see nothing wrong with the franchise. The company continues to grow non-COVID revenues at 12%, much like it did before COVID. Cash generation is very, very strong. Capital allocation, specifically the Metropolis acquisition, we thought was a good acquisition. And therefore, as the stock came off through June, July, we heavily built a bigger position in Dr. Lal Path Labs. Now, as you're rightly figuring out, to finance these positions, we have to sell something. So stocks which had made us lots of money, which had become an ever larger part of the portfolio, we had to trim those to finance these positions. So for 6 months of the year, I think as we were trying to build the positions in Divis and in Dr. Lal, we trimmed our Bajaj finance a little bit to finance these positions. We trimmed up Pidilite a little bit, but that's how you rebalance the portfolio. You take companies where the share prices come off for no logical reason, and you ramp up the positions. And then to finance those, you look at where you've done extremely well, and you take some profits there and reinvest in stocks which have come off. And just to be clear, I've invested in Marcellus's portfolios. My parents are, our 10,000 clients are, so I have a vested interest in all of these companies that I'm discussing here.
All right, sort of, what about rural India? That seems to be in a spot of bother. The hope is that things are bottoming out there, at least at some point of time in the coming months. I think in the past you've told us that you have exposure to V-Mart as one of them, one of those stocks I think out there.
That's right. And I think, I honestly, as they say in Hindi, if rural India is bottoming out, but I'm honestly not sure whether rural India is bottoming out or not.
So sort of the feedback I think that you have got is still there is pain out there. And even earlier today, we spoke to the management of Bajaj Auto, just to cite an example, and they said that the lower half is still struggling. The upper end, the top half of their two-wheeler market is doing pretty well. So the hope is there, but we don't know when that pain is going to end for the rural market. But are there any opportunities that are coming up from that part? I think you'll have exposure to a couple of stocks, if you could correct me. V-Mart and Amrutajan, I think so, are a couple of names out there.
So we have exposure to those companies, you're right. And I agree with the Bajaj Auto people. We are not seeing any relief in the hammering that low-income people in our country have received over the last 4 years or so. Even discussions with unlisted companies suggest the same point of view. I was really actually pleased to see that the government announced 2 weeks ago another year of basically free food for low-income people. I think that's the sort of relief that low-income people need after the pounding they've taken through COVID. But beyond these sorts of sops from the government, is there any other structural story? Is there a job creation story that will help low-income people? I don't have visibility. I can't see any imminent relief for low-income people in India. And it is quite sad because the rest of the country is rocking. The sorts of people who watch CNBC, their salaries are going up, there's more job creation, their businesses will be flourishing. And therefore, we're living in a country with two distinct stories. One story that we're making money from, the other story we as a country are struggling with. But in a way, the bigger challenge is it's not obvious there's any relief in sight for low-income people in India.
All right. Saurabh, in the financial space, the Kings of Capital portfolio, you've always subscribed to the so-called high-quality private sector financials, the ones which have had a track record of growth, etc. But those have underperformed over the last, say, 12 to 18 months, so to say. And instead, the big performers have been the PSU pack. With the banking sector being where it is right now and the NBFC sector, do you think the next leg of growth will come from private players or the PSU rally will continue?
Look, I mean, we have to keep in mind that you are managing money for 10,000 people. Now, can I take, say, your money and invest in a bank where the MD CEO changes every 3 years, right? I don't think I can. In a sector like banking where equity gets leveraged up 10x, you obviously need assurance that high quality people will run this bank or this NBFC for many years to come. Unfortunately, with PSU banks, it's difficult to get that, but every 3 years, in many cases, every 2 years, the MD CEO will be spun around and a new person will rock up in the job. The second is these PSU banks are geared 18, 19, 20x. That's frightening amount of financial leverage. This is debt equity. We are investing, say, in an HDFC bank or a Kotak bank, which are levered 6, 7, 8, 9x. And they're generating, in HDFC Bank's case, 18% ROE with, say, 8x, 9x leverage. Other people are investing in, just to use an example, State Bank of India, which is generating the same ROE as HDFC Bank, but with more than twice the leverage. And that, again, is something we find very difficult to countenance. Our job is to protect investors' money before we compound it for them. And how exactly I will protect someone's money if I'm investing in a bank which is leveraged 18, 19, 20 times is something which is beyond us. The third challenge we have is the PSU bank exists to serve the nation. They are owned by the government of India by and large, and they exist to serve the government of India, quite rightly so. Why will they compound money for Marcellus, the shareholders of our Marcellus, is not quite clear to me. And hence, we've stayed away from these, and that's what we'll do for the foreseeable future, which is invest in banks where you can see a long track record of prudent financial management, a stable management team, which has built the business over 20, 30 years of hard work. That's how investing is done. And if that underperforms, so be it, that underperforms. But the goal is not to sort of wake up every morning and beat the index. The goal is to make sure you protect your clients' money and then compound it as a Kotak bank or an HDFC bank grows their business at around 20%, which is what they've done for the best part of 20 years.
Just a quick word. How long do you think this PSU banking upcycle will last?
I honestly don't know. We don't have any crystal ball gazing to be done here.
All right.
If I look at the last 10 years, they've created zero shareholder value. But I take your point, in the last 3 years, basically from the COVID meltdown, they've done well. So the way we think about it, the higher the NPAs through COVID for a PSU bank, the better their shares have done. How long the party lasts, I wouldn't know.
Thank you very much, Saurabh, for joining in. Right now, at least, there is still a party going on in the PSU banking space, but great conversation as always. Happy New Year. Slip into a very short break. As always, we'll get you a check on what dealing rooms is saying in our segment D Street Chatter. We'll also get you some calls that you can buy today and sell tomorrow, BTST calls from our technical experts.
Welcome back. The market continues to do well. ONGC is the stock which has moved to the high point of trade, and EID Perry from the broader markets. Sugar has definitely been one of the sectors of all of last year, and now as we speak, that is another stock which is currently moved to the high point of trade. Gain of almost 3% odd, but the move has been clean. Let's get in Nimesh now for our favorite segment, D Street Chatter. Nimesh, what insight are you getting from the dealing rooms today? Volumes are still not back, obviously.
Volumes are muted for sure, and the main reason for that is most of the Asian markets are shut today. So that's impacting the volumes for in India as well. But I think it's a good start to the new calendar year. Markets are up. But, even the mid caps and small caps are budging in trade today. But I guess it's lack of large selling compared to what instead of large buying. That's the overall feedback. There is not much selling coming in from the larger institutions. So the FIF flow starting tomorrow or day after will be very important. And as I've been saying, right, come mid-Jan, you're going to see the big allocation for EM. So that's going to have an impact on the FIF flows as well. I guess the sector of the day today clearly is metal stocks. All are buzzing in trade and on large volumes. It's a combination of not only buying, but also some short covering in the metal names, especially the FNO stocks. So that's one space which is clearly buzzing out. And the other space which is done well today is the PSE index. The PSE stocks are well bid is what I understand. So the ONGC, PFC, REC, all are well bid by larger institutions. That's the overall feedback. From a technical point of view, I believe the range seems to be between 17,800 and 18,300. On either side, it has to move for a decisive move going forward. So that's the range to watch out for in the Jan series. But largely, it's lack of selling pressure from the larger institutions. The volumes have not picked up yet, and there is clearly buying, except for metals, some bit of indices back in the private sector enterprises.
All right, lack of selling taking the market higher today. Individual stocks, what have you brought out on your list today?
So in terms of individual names, the first stock on my list today is Samvardhana. That stock is buzzing in trade up 2% last when I checked on good volumes. And I believe the buying interest is resumed in this particular stock from larger FI. So that's the first one. The second stock is Bank of India, a big outperformer of 2022. The stock is up 75% this year. But even at these levels, there is a bit of buying interest back. And the overall feedback is maybe the street is anticipating a strong quarter 3 and hence a bit of pre-positioning in that stock before the results. So that's the second one. And the last stock is Praj. That stock has been consolidating off late. In fact, in the last 1 month, the stock is corrected 10-odd%. Now I believe the large selling pressure from a leading domestic mutual fund seems to be out of the way. So that pressure was largely from a couple of large funds, including a domestic fund. That seems to be over. So that's back on the radar, and some bit of HNI interest is back in Praj as well.
Okay, all right. Thanks a lot for that, Nimesh. Well, Mitesh Thakkar is back with us. Mitesh, first, what about today's trading action? Volumes are low, but it's been a pretty good one. The intraday dips have got bought into. Your take on the Nifty, as well as fill us in with a couple of picks?
So, Nigel, I've been trying to highlight this, that one, the back Nifty is good, the metal index is good, and the Nifty, the intraday indicator is still pointing upwards, while the medium term is slightly on the negative side. So I think the market is, possibly still contracting. We haven't seen a decisive move above 18,250, nor a break of 18,000. So I think we're still in that 250 point kind of a range. Having said that, 2 BTST calls, which is what I have on the list today. IDFC First Bank is a BTST. Keep a stop below levels of 60 for targets of 63. And LIC Housing Finance, that's the other name. That's a BTST with a stop at 420 for targets of 430.
Thank you very much for that. The auto sales numbers for the month of December have been coming in over the weekend and through the day today. Sonia is here with a complete roundup. Sonia?
Well, thanks a lot for that. I decided to, break it up into the strong and the weak numbers. And just to start off with the strong numbers first, Tata Motors was a very good set of numbers. Both the passenger vehicle as well as the commercial vehicle segment did quite well. In fact, the total domestic sales went up 10%, led largely by the medium and heavy commercial vehicle segment, which saw a growth of 34%. And Tata Motors posted its highest ever monthly as well as quarterly passenger vehicle sales. Let's move on to Ashok Leyland. In fact, the entire commercial vehicle piece has done really well. So Ashok Leyland, very strong sales in December, a total growth of 45% year-on-year. This was largely led by the medium and heavy commercial vehicle sales, which were up 61%, and that's because of a revival in bus demand. So bus sales have gone up by about 108% compared to same time last year. Let's move on to M&M now, where there was very strong traction both in the auto as well as the tractor segment for them. Auto sales went up 45% year-on-year, led largely by the new launches in the SUV segment. So SUV sales went up 62% year-on-year, coming in at over 28,300 units, while the tractor segment, both M&M as well as Escorts did very well. So the tractor sales for M&M went up 27% year-on-year. The company is saying that the Rabi crop sowing has progressed very well, while Escorts as well, total sales went up by almost about 19%. Now, on the weaker side, you had Maruti, Bajaj Auto and Royal Enfield numbers, which were quite weak. Maruti's numbers, despite the management saying that, the retail sales are better, the wholesale numbers looked very pretty weak. Total sales down 9% and domestic sales down about 10%. Bajaj Auto as well, big crack in the export numbers, which led to an overall fall of 22%, and export sales were down by almost about 40%. And finally, Eicher Motors, Royal Enfield sales were below street expectations and down 7% compared to what we saw last year. Back to you.
All right, Sonia, thanks a lot for that. So that's a roundup of all the auto sales for the month of December. Meanwhile, just keep an eye out on the markets. The Nifty has gone past that 18,200 mark, and the credit for that goes to Reliance. Pull up the intraday chart of Reliance, and you'll see, the stock has spiked in the last 10 odd minutes or so, has moved to the high point, and that coincides with the way the Nifty is moved higher as well by the sheer weight of Reliance. It's taken the Nifty above that 18,200 mark. The question is whether it stays above 18,250 or not. The Nifty Bank too has been doing well. We've seen a big move in a couple of these names from lows. Axis Bank, for instance, has moved off lows, and we have Kotak Mahindra Bank as well. So what it has done is it has taken the Nifty Bank above the 20-day moving average of 43,165 as well. We have Neeraj Diwan, who's the director at Quantum Securities, joining in now. Neeraj, wish you a very happy new year. We heard Sonia give us a roundup of all things autos. Your thoughts on the auto sector this year? The last year's outperformer was M&M, underperformer was Tata Motors. Do you think Tata Motors can make a turnaround this year?
Yeah, good afternoon. Happy New Year to you and all the viewers. Yeah, I think the kind of number that we're getting for commercial vehicle space, and that augurs very well for Tata Motors. Even Mahindra & Mahindra numbers have been pretty encouraging. I think Mahindra & Mahindra will continue its outperformance even this year. One is because the new launches are doing well, and plus, even tractors have given good numbers, and they should continue doing well. And valuation-wise, also Mahindra & Mahindra is still attractive. It has very good ROCs if you compare it to the others in the auto space. So that should continue to do well. And as far as Tata Motors is concerned, definitely domestic business is doing well and should continue doing well even in the medium term. But one concern definitely has been the global sales as far as Jaguar Land Rover is concerned. So if China opening up is happening the way we are seeing right now, and if numbers pick up from there, I think then Tata Motors can be one dark horse there. So one should keep Tata Motors also as stay invested in Tata Motors, because I think maybe that period of consolidation is over, and you may see some surge there with global numbers picking up in their Jaguar Land Rover sales.
Neeraj, what about Bajaj Auto? The management was telling us earlier that perhaps export is showing signs of bottoming out. One of the key markets, Nigeria, will be holding elections in the month of February. So once that's out of the way, they expect demand to stabilize for their key market. How does Bajaj Auto look to you?
See, definitely the numbers are not good right now. And domestically also we've seen the rural demand is not picking up. So that may take some more time. I think maybe somewhere in the middle of next year or the second quarter of this year, second calendar year quarter. So, but Bajaj Auto, if it comes down to a decent valuation, Bajaj Auto, if it comes down another 10%, would be a good bet to buy purely on valuation, and then the numbers can follow suit. So I would keep it on the radar and add one if it comes down by another 10% from these levels.
Okay, all right. Neeraj, I'm not sure whether you tracked this one, but from the infra pack, NCC, they came out with an update today for the number of orders that they won in December, and it looked absolutely cracking, if you compare it with the previous couple of months. Do you track NCC or any other infra stock that you like?
Yeah, NCC definitely I track. I was looking at this couple of weeks back only, because the order book was at 40,000 crores when I saw after the second quarter numbers, and that is what 3.6 times last year's sales. So the order book is very strong. Even the debt, which is close to 1,900 crores, they were further reducing it by 600 crores this year. So debt reduction is happening, balance sheet is strong, and second half always execution picks up. And this is one of the players which gets a premium because the execution skills are very good and we're delivering on time. So I think NCC, even if you value it at 10 times 1 year forward, my target came to about 115. So still some more upside, even on a very, very conservative valuation I can see on NCC. So and I think infrastructure as a whole, you see that the government push on infrastructure, the kind of order that's been coming from even the government is actually adding on to the order books of all these infra majors. And over the last couple of years, even the balance sheets have become much better. And with the stronger balance sheet, execution picking up, and commodity cycle also, has come down. Commodity prices have also come down a bit. So that should also impact the margins when the execution picks up, in the December quarter and the March quarter results come. So I think infrastructure as a sector looks good. I think infrastructure is doing what PSU banks did in the last quarter. So I think that continuation may happen, and you may see that kind of outperformance in infrastructure space.
Right. Neeraj, one of the themes that worked extremely well in 2022 was the sugar sector. Across the board, we saw big gains. Do you think that is likely to continue into 2023 as well? I mean, back in the day, the conversation was the cyclical sectors now gotten structural. How much of that is already in the price with the kind of rally that we've seen? And this sector, which sees moves across all the stocks, in that, how do you pick the leader? Which one would you go for?
See, I think that the kind of sugar prices we've seen globally, they've again come to the high of last year, that is close to $20. So the sugar prices are strong, and all the new contracts which are happening are also happening at a higher price now. So sugar, which saw correction after that high they saw in sometime May, April, May kind of a period, they saw a decent correction also from those levels, and they consolidated a bit. I think you saw a 10% kind of a move, or maybe 15% kind of move after the correction, from those levels. But I think the story is still intact. One, sugar prices are strong, and they will impact the domestic, sugar producers also. And plus, there's a talk about government allowing, a higher export also. So that number may also come, and that may also support sugar companies. And ethanol, blending of ethanol prices, the excise, the GST benefit on ethanol blending, all that is good for the ethanol part of the business. So I think the sugar sector still looks very good, even after the rally that we've seen. So among the leaders, definitely, Balrampur Chini is a leader there, which should continue doing well. But then it's a future stock, so volatility and the movement depends on, the future position. But barring that, Dwarika Sugar is one good company, which valuation-wise is still attractive, should do well. And that can be also one of the investment picks.
Okay, I need to slip into a very short break. Do stay on, Neeraj. We'll come back with more market talk and as well the market closing levels. Welcome back. The Nifty is above that 18,200 mark, so things picked up in the last 1 hour. It's a 100-point gain that you can see on the Nifty, on the Sensex. It's a rally of 300 points. We're closing at the day's high. Neeraj, thank you very much for joining in on what was the first day of the new year. Wishing you, your team, a very happy new year. For the markets, we're ending with gains of close to about 0.5%. It was a quiet, steady kind of session till the last pickup took place in the last 30 minutes. Remember, most of the Asian markets were shut today, so volumes were on the lighter side. The metal sector was shining, led by the big upgrade from Jefferies as well as China reopening theme. The metal index up close to about 2.5%. And talking about the big metal winners, Tata Steel, Hindalco were up 6 and 3% respectively. But outside of that, it was steady gains. So for instance, the Nifty Realty Index was up close to about 1%. The Nifty PSU Banking Index was up 0.9%. The Banking Index was up 0.6%. The IT Index as well had a gain of 0.5%. Along with that, the Auto Index. So pretty broad-based, you would have to say. Talking about the big winners, you had ONGC rallying 2.5% on the back of Brent crude prices, surging to levels of 86. Tata Motors, M&M, so some reactions to the auto sales numbers for Tata Motors. The numbers look good, 10% jump on a year-on-year basis. ICICI Bank, Axis Bank, higher in trade. Infosys too, surging nearly 1%. On the losing side, softness seen in Bajaj Auto, MotoCorp. So the two-wheelers were sluggish. Asian Paints goes home as the top Nifty loser, a cut of 1.5%. The street awaits Titans, pre-quarter updates. So Titan ahead of that was down 1.3%. So all in all, a good day, right? Steady and strong.
Well, it was a good day of trade. Rima and our team is just filling us in that Nifty has clocked its second best first day gains all the way since 2013. Remember, last year itself, we were off the blocks in style. We were up 1.5%. And this year as well, we're going home with gains of close to around 0.5%. To track a few more gainers, Pharma was up close to around 7%. Moil did pretty well in trade today. Reddington, that one did see a sharp correction. From around 200 rupees, it went down to around 175 odd, but that's bounced back in style. So that ended high with a gain of around 4%. Orient Paper as well was up close to around 4% or thereabouts. Mangalam, a good session. The Nifty ends in style with a gain of around a century.
The Nifty ends with a century, but the broader markets are the ones which are actually feeling the real runs. Almost 2 stocks ending in the green for 1 in the red. 2,000 stocks on day 1 of 2023 ending higher. From the F&O pack, we had NCC, which was one of the big gainers, up almost 9%. SAIL did extremely well, as did IRB, which did extremely well in trading today. Obviously not an F&O stock, but we did see some moves on that counter. On the losing end, though, we had MCX, which was down 6.5%. Honeywell was the other one, which was down about 2% odd. And from the cash market, we did see a big gain come by on SML Isuzu, locked in 20% upper circuit on account of their December sales data. So more stocks advancing than declining. With that, we take your leave on this edition of Closing Bell. That's a wrap on the first trading session of 2023. A good day for the markets. All right, a wrap on Closing Bell. Take a short break, come back, and you have Wizards of D Street coming back right after this short break.